Hi, this is Anil. I was fortunate to be the All India Rank 1 holder in RBI exam back in 2018. Now, I'm absolutely thrilled to be part of Oliveboard as a super mentor for their RBI Grade B programs. If you are aspiring to crack this exam in 2024, I will be available as a super mentor to discuss one-on-one with you, share strategy lessons, draw lessons from my preparation and set you up for success. Click the link below to check out the details. See you on Oliveboard soon.
Hello everyone, I'm hoping you all are good and fine. Myself Ajay and I will cover your entire syllabus of costing under the SEBI Grade A examination. In this particular session, we are going to start our new chapter, that is a process costing. But before starting our new chapter, we have to understand some basics points related to the process costing. That is your foundation, and you can say that is your base. Without understanding these base concepts or a foundation concepts, you are not able to solve even a single questions of process costing. So yes, we have to understand first of all some important concepts related to process costing. That is your base under this chapter over here. But before starting and doing any concept, let's introduce about myself Ajay, and yes, myself Ajay, and I am an educator of your SEBI Grade A examination for your two subject, that is your company law and costing. So myself Ajay Thagral, and I having a teaching experience of more than 6 years, and I have mentored right now more than 3 lakhs of students, including your professional examination like chartered accountant examination, company secretary examination, JIB, CIB, regulatory and banking aspirants. Yes, I have some achievement in my life, that is best educator award in the banking examination, best presenter award in the SEBI awareness program, and best presenter award for the POSH and the POSCO Act over here. So yes, I have a vast experience in related to this category, SEBI Grade A examination and Chartered Accountant examination. So I am the right mentor that will help you to understand each and every concepts of your two subject, that is your costing and your company law. Yes, I am covering your two subject under the SEBI Grade A examination. Your costing syllabus I will cover, and also I will cover your company law syllabus over here. So yes, before moving ahead, I want to tell you I am basically following these 3 success mantra in my life. And if you want to crack any examination, I am not saying that if you want to crack SEBI Grade examination, no. If you want to crack any examination, even a UPSC examination, you have to be maintain and follow your 3 success mantra. Now, what do you mean by sir 3 success mantra, and what is our 3 success mantra over here? Like your patience, trust and self-reliance. Yes, this PTS success formula that you have to be follow in your life if you want to crack any examination. What do you mean by sir patience? Yes, we have to be understand some complicated chapter also, like your process costing, contract costing, budgetary control, marginal costing. Like that chapter are literally very important, and literally we need a very conceptual clarity for doing this chapter. If you have not a conceptual clarity, you are not able to solve a single question first of all. So keep patience, and the second important mantra is your trust. Trust on your faculty. Yes, I am the right faculty. I have produced so many results, and my student has scored in CA intermediate or CA foundation more than 90% mark in account subject or a costing subjects. And if I am talking about for a CA intermediate aspirants who have scored 95 marks in my costing subject. And if I am talking about the company law, yes, my highest score, my student's highest score is 82 marks in the company law under the CA category. Yes, CA you can understand one of the toughest examination in India, falling under the top 5 difficult examination in India. So yes, I have mentored so many aspirants in chartered accountant, in company secretary. So I am the right mentor to help you and cover your entire syllabus of costing and the company law. But in this particular session, we are going to start our process costing, and we will able to understand each and every concept related to the process costing over here. The third thing is what? Third thing is your self-reliance. In this self-reliance, sir, what we are required to be maintained? In this self-reliance, you are required to be maintain your own handwritten notes. Now, sir, what is the usefulness of this handwritten notes? These handwritten notes will truly help you to revise entire syllabus of your costing and the company law. Yes, you are here right. This handwritten notes will help you to revise each and every concept. because at the time when your examination will conducted, you have very less time to revise each and every concept. So how you will able to revise? This handwritten notes will help you. I will encourage you to maintain your own handwritten notes, where we will see so many formulas, we will draw some more important flow charts, and also cover this some amount of contract costing, your accounts, and all the formulas related to our each and every chapter. So this is your very important mantra, that is your self-reliance. Yes, you have to be a consistent first of all and do the classes in a live way. And yes, for your kind information, I want to be clear one thing, that our all these SEBI Grade A examination are live right now, and you can able to access all the classes by downloading the application of Oliveboard over here. And if you want to get this e-PDF notes, where you will get, sir, here you will get go into the course section, you will able to get what, sir, all the PDF of this class, where we will going to be learn about what is the normal cost concept, what is the abnormal cost concept, what is the meaning of an abnormal gain concept, and after that we will understand the format of process costing, and we will also do one most important question on the process costing over here. So let's start our very important chapter, very important concept, that is your process costing. Now sir, what do you mean by process costing? First of all, tell me what do you mean by process costing. You know, most of the product are not be maintained in a one process. They need 2 or 3 process in order to make this particular product over here. Like you can take the example of car. So car is that a perfect example where this process costing will apply. Now car is manufactured into a 3 or 4 process under the process 1 department, where we are required to be manufacture the steels of the car, the shed of the car, where we have to be tied some you can say that the glass of the car, bumper of the car. So all the things, and in order to making one particular car, yes, we need first of all what, sir, we have to be passes through the various processes. In one processes we are just doing the metaling processes, in second processes we are fitting some screw, we are fitting some tire, we are fitting some you can say that the mirror of the car over here. In the third process we are doing what, we are doing the paint, and in the fourth process that is the last process when we are able to manufacture our final goods of what, car over here, that's are ready for the available, that are ready for the available for the sale. So yes, car is your that example where we will able to understand on which we have applied the process costing. So for that manufacturing of car, we have the so many process in order to manufacture, that is your process costing, and that is about different process that we have, and on this process the whole manufacturing of car has been done. So what do you mean by process costing? Let me know. So process, when the final product is passing through the different processes before getting it complete, so that method of costing, now those method of costing that we are applying here is known as process costing. Now at every process, yes, we have to be incurring some amount of cost, like your labor cost, like your overheads cost, factory cost, office administration cost, and at every stage we are also be incurring some amount of material. Like at the first process, we are actually manufacture the metals, we are actually introducing in second process our glass, our tires. So these all are the direct material of this particular at the time when we are manufacturing this car over here. So yes, this all the process we have a final product, that's our passes through the different process before getting complete. This is your process costing. So process costing is just like your method of costing, mainly in a manufacturing where units are continuously mass produced, through that we have more processes. Yes, so when I am talking about the process costing, it is a process that is a costed, means that process in which all the material, all the labor cost are incurring at the different processes when we are manufacturing the final product of the goods. Yes, so this is your process costing. So you can see here that a flow chart so that you will able to understand how the process costing or how the actually any final product is made during the various process over here. So at the first stage we are doing what? We are introducing some amount of input, and in the second stage that final output of the process 1 we are introduced in the process 2, and that output of what? When I am talking about the output of process 1 will become the input of what? Will become the input of process 2 over here. Like in the same way, when we have done all the things in the process 2, like their output of process 2 become the input of what, sir? This input become again the output of what? Output of process 3, and in the output of process 3 this will become the what, sir? Input over here. So at every stage you can see here, at every stage we are incurring some amount of material, some amount of labor, and some amount of overheads over here. Yes, what do you mean by overheads? You can simply do the basics of costing at the Oliveboard course, so where you can go and download the application and learn about what is the basics of costing, where I was explained what is the meaning of direct costing, what do you mean by indirect costing, what do you mean by direct labor, indirect labor, what do you mean by overhead. So we have all the concepts we have covered in our first session of the paid course, so where you can go and watch all this session related to the basics of costing. Now when I am talking about at the process 2, again we have some amount of additional labor, some amount of additional material, and also we have some amount of overheads. Overheads, in for your kind information, if you want to be recall, overheads means your what? Your expenditures, that is your indirect expenditure like your rent, which are not with a part of final product, but we have to be incurred. Like I was giving you the example at the paid class, like when you are paying a salary to the supervisor who are actually doing the supervision of whole the process of what, sir? Process over here. So that supervisor is not directly be involved, but we have to be incurred some amount of cost. That is your what? That is exactly your overheads, and we have to be recover that overheads from the what, sir? From the customer. So that's why the reason we are adding in our manufacturing of per units cost over here. So at the third stage we have to be incur again some amount of labor, material, and after that we have at all the processes, you can say that we have the final product, and that final product is your final product that's are readily to be available in the markets. So yes, all the parts and material that we are introduced in various processes, and after completing all the processes, that's all the finished goods that we have, that is your process costing. So here you can take the example. What is the example over here, sir? Example is your when you are manufacturing a car. Sir, what the thing that's we required? When I am talking about when you are manufacturing a car, first of all you need a metal. Yes, first of all you need a what? You need a metal. So all the metal, by using this metal you are forming the shape of car. This is your, you can say that this is your process 1. Now in this process 1 we are introducing some amount of raw material, and now raw material is what? That your metal over here. Now now this metal are not be made, not be like do all the shape. Yes, we need some kind of labor. Yes, for that in process 1 also we are first of all introducing the material, that is your direct material also and the indirect material also, and for doing so we need some amount of labor, and we are also incurring the labor cost also, like your power that we are using over here, that is also your expense over here. So at every stage you can see here, not now in the second process we are doing the e-coat and the wash. At the third stage we are doing the paint and the coating. So this is your process 1, this is your process 2nd, this is your process 3rd, and this is your process 4th. So at the 4th process we are able to complete this raw material of car. We are able to produce the final product over here. This is your entire process over here for manufacturing one final product over here. So now the question arises, at every stage we are incurring some amount of cost related to the direct material, related to the indirect material, related to the labor over here, related to the overheads and overheads. So yes, we have to do the accounting work. So how we will do the accounting work related to all the expenses that we are incurring? For that, only that we are able to know and we are able to get the final price. The reason is that if we know very well what is the total cost that we have incurred at the all these stages, only then we will add some amount of profit at the cost and we will able to sell in the market over here at the sale price. This is your process costing. I hope right now you are able to understand each and everything related to the process costing and how we will do the things. Like we have a process costing means what? We have to be prepared with so many accounts. Whatever the processes that a raw material is manufactured through the various processes, yes, we have to be maintain each and every account at every processes, and each every processes we have incurring some amount of material, some amount of labor cost, some amount of overheads cost, and after introducing that raw material we have introduced some amount, we have get some amount of output, and that output we will introduce in the second process over here. So till we are reaching at the final product, we are doing the processes of our all the raw material over here. So this is your exactly the process costing. Now we have a format of what? Now you can see we have a format of process costing. How we will do the process costing accounting over here. So for doing the process costing accounting, you have to be prepared so many process over here. Like you can see here the process 1 account. In the similar way, the same format will be used in your process 2 account, process 3 account, or process 4 account, whatever the process is, that the requirement of the question. Like you can see here at the time of what? At the process 1, we are incurring some amount of direct material. So at the debit side we have what? The direct materials, because we are introducing some amount of direct materials for manufacturing of this particular product over here. We have to be incurred some amount of direct wages. Why, sir, this is a direct material, direct wages? Because this is a part of the production. When I am saying in order to manufacturing this particular t-shirt, I have a textile, because I am seeing this textile are used in this cloth. So this is your direct material which are using in this particular at the time of manufacturing of the t-shirts. But when I am saying about, I am also introduce some amount of material like your stationery, like your cleaning cloths. Now this cleaning cloths or stationery is not using in the manufacturing of this product, but yes, it's a part of the manufacturing process. So this is your indirect material, or you can say that that indirect material is your overheads. So yes, we have also a direct expenses and we have a production overhead, and also we have the concept of abnormal gain, abnormal loss, a normal loss. That's we will also be understand, but just right now you are able to understand this process of costing over here. How the processes of costing of accounts that we will maintain. This is your simple format. Now, a very important concept, that is your process cost. In the process costing, that's we have a normal costing. Now the question arises, sir, what do you mean by normal costing or normal loss over here? When I am talking about the normal loss, yes, the normal loss are incurring at the time when we are manufacturing at any goods. Like if you want to manufacture what, sir? If you want to manufacture one wooden statue. If you want to manufacture the one wooden statue, what do you need first of all? Yes, sir, we need a wooden. So if you want to manufacture a wooden statue, we need first of all wood. Let's say assume you are for manufacturing this wooden statue, you needing a what, sir? You are actually requirement of 3 kg of wood. But after when you are giving a shape to the statue, yes, as I am saying, this all the 3 kg of wood that you will use at the time of manufacturing this statue. No, sir. Yes, we have some amount of wastage at the time when we are giving a shape to our statue over here. So after when we are using the 3 kg of wood, but from the 3 kg of wood, we are only able to use the 1.5 kg of wood for the manufacturing of this wood statue. So the remaining 1.5 kg or what, sir? This 1.5 kg or normal loss. Now this normal loss has to be incurred. We cannot be avoid normal loss. Yes, it has to be incurred because it's a part of production. And we can because this is a normal cost, so we can separate over the cost of need. Now what do you mean by separate cost? Don't be worried about. I will explain you. Don't be worried about. So what do you mean by, first of all, sir, normal cost? In the same way you can take the example of when you are using 1.5 liter of what milk in order to make the rabdi. Yes, you know very well what do you mean by rabdi. Rabdi is a sweet product that's are manufacturing from the what, sir, from the processing of milk over here. So yes, when you are using the 2 liter of what, sir, 2 liter of milk, and out of the 2 liter only you are able to use the 5 or 1 liter of what, you are able to get only the 1 liter of rabdi. Now you are only be able to get the 1 liter of rabdi. So what do you mean over here? 1 liter is what, sir? 1 liter is your normal loss, and it has to be happen. You cannot be controlled, you cannot be avoid. So this is a normal loss. So how we will treat this normal loss, sir? Now the question arises, very beautiful question. Don't be worried about. I will show you the treatment also, and I will also be tell you what is the treatment of normal cost that we will do under the process costing. Now first of all, let's understand what do you mean by normal cost or normal loss. So normal loss is actually not a loss. It's basically a part of production. When we are manufacturing this particular t-shirt, yes, some amount of shred and the wastage of textile that's happened, because we have to be given the shape of these t-shirts. So we cannot be say that that's all the wastage are our loss. No sir, that's not a correct statement. So this is a particular, you cannot be say that this is a loss, but it's a part of production. So it's just like a misfortune that will definitely be happen because of the nature of the products consigned. It is a tendency. The reason is that we cannot be avoid this particular reason. So because it is an unavoidable reason, and because of the natural loss like misfortune, ordinary spillage, wastage, breakdown, evaporation, and all like that. So this is your what, when the milk are evaporated and we are able to get the 1 liter of rabdi. So it is basically the 1 liter of evaporated milk is what, your normal loss. So we cannot be control that normal loss. Now the question arises, how we will treat the normal cost over here in our process costing. When we are preparing the process costing, yes, that's a very important part. It become a part of the cost of products, and cost of normal loss is absorbed by the good units. Yes, so we have to be incorporate all the normal cost, and we are recovering from whom? We are recovering from the customer. So that purpose we are adding our normal cost or normal loss in our process costing, and we are incurring our what, sir? We are exactly incurring the normal loss, and we will able to recover the customer. So it's a part of the production process. Yes, that will definitely be happen. But you know very well, all the normal loss or all the normal wastage that will happen, sometime it will be sold at a scrap price. Yes sir, we know very well some amount of normal wastage, some normal waste product we are able to be sold in the market. So that when we are able to sold in the market, so what amount that we are receiving for selling that normal wastage, that is your scrap value. So scrap value is what? Sometime the outcome of normal loss. We are able to sold for a very small value. So for example, you can take the example in the production of screw. There may be a loss such as the metal wastage. Now this metal wastage you can be sold at the scrap merchant for a fees. Yes, so this is your scrap value. Now we have a clear understanding about what do you mean by normal loss, what do you mean by scrap value. Now let's move forward and solve this particular question. Only then you will able to get the answer, sir. How will incorporate the normal accounting in our process costing. So this is your example. By solving this example, you are able to understand how we will do the treatment of normal cost in our process costing. So here you can see a example over here, like we are incurring a material. We have a material of 1000 kg and who having a cost of amount rupees what? when I'm talking about the cost, I have 1 lakh rupees of cost that's I was incurring at the time when we are purchasing 1000 kg of material over here. When I'm talking about the labor cost for manufacturing this 1000 kg of raw material into the final goods, we have to be incur some amount of labor cost, yes sir. And I'm talking about here we have the 2 lakh rupees of labor cost over here, and we have some related to the overheads also. Overheads means your rent, your indirect expenses, your depreciation, your salary, all the expenses that we have, and that's we have the 50,000 of overheads also. Now the question is saying, sir, we are incurring the normal loss of 10%, and these normal units are be sold at the market rupees 10 per kg. Now I have to be solve this particular question first of all. So how we can solve this particular question over here? So here I have some information from this question, so I draw a format. I have draw a format like particulars, I have draw the units column, and I have also draw the amounts column over here. Now in the particular, what amount of expenditure that I was incurring on the manufacturing of this material, sir, yes, I am incurring the 1 lakh rupees of cost at the time when we are purchasing the 1000 of what 1000 of kg of material. So I have incurring a cost of material, and the material when I am purchasing 1000 kg, I have incurring what, sir? I have incurring the 1 lakh rupees of amount of cost. Now for labor, what amount of cost that I am incurring here? 2 lakh rupees I am incurring. Now at the third stage, I have what? I have the overheads. Now overheads, I have what, sir? 50,000 I have the overheads. Now you can see very clearly we have also a what, sir? Normal loss over here at the rate 10%. Now I have also a normal loss of what? Normal loss. Now normal loss of what? 10% of the actual input that we are introduced in our process over here. So this is just like a process costing, but able to understand first of all the treatment of normal cost. Because this is a normal loss, so I have first of all deducted the out of the 1000 kg, I have first of all deducted the 100 kg of unit from this material. So and right now we are able to sold also this 100 kg of normal loss unit at the market rupees 10 rupees per kg. So I get the 1000 rupees as a what, sir? As a way of scrap value. Yes, all the things are clear. Yes sir. Now you can see here what amount of actual cost that I was incurred for the manufacturing of this 1000 kg. So you can simply be add, and yes, you are allowed to use the calculator. So be assured you all have a calculator at the time when you are doing the live classes or recording classes, or you can also be keep your calculator at the day of examination also. So I am doing the 1 lakh rupees, 2 lakh rupees, 50,000, and I am deducting the 1000 rupees over here, 1000 rupees over here. So I get the 3,49,000 of the total cost. Yes, I have the 3,49,000 of the total cost, and when I am incurring the total cost of 3,49,000, I am getting what amount of units over here? Yes, I am getting the 900 kg of what? 900 kg of what? 900 kg of units over here. So now let me know what is the cost per unit. That's I have exactly, I am incurring what amount of cost for per unit. So if I am saying for producing 1 unit of this particular product, what amount of cost that I have to be incurred? So you can calculate the cost per unit, and how we will calculate the cost per unit, sir? You can simply be divide the total cost divided by the number of units that you have produced. So you can simply be have 3,49,000 out of 900 kg. So yes, for manufacturing one unit, you are incurring 387.7 per kg of the what, sir? Cost over here. Now the company owner, or you can say that the factory will do what? Adding this some amount of profit in this particular case, and he can simply be sold into the market and he will get the selling price. So here you can see we are giving the treatment of normal cost in this particular example. Now in the same way, In the same way, when I am talking about the abnormal loss, because abnormal loss is not the first of all part of the production. There is some misfortune or there is some uncertainty not in the regular day, but at any time there is any kind of uncertain will happen, and we are able to incur the loss over and above the normal loss. That is your abnormal loss. But yes, we cannot be consider abnormal cost into our what? Into our costing of manufacturing of one particular units, because the customer will say yes, sometime your cost is fluctuating, sometime your cost is fixed, sometime your cost is very high, sometime your cost is very low. What the thing is, because this abnormal loss is the part of, you can say that is the mistake of the company. We cannot be recovered from the customer. So that's why the reason we are not be incorporating the abnormal loss over here under the process costing also, or at that time when we are preparing the cost accounts over here. So that treatment, what treatment that we have, sir, we will see it in upcoming slides. So don't be worried about. We will also be solve a question on this. So what do you mean by abnormal loss? Loss which is over and above the normal loss is your particular what, sir? Is your abnormal loss over here. Now, what is the reason, sir, abnormal loss is emerging? Abnormal loss is emerging due to the accident, due to the shortcoming, and due to the misfortune is not the normal and can be protected having an appropriate consideration. So yes, that loss we are able to protect, but due to some of our negligence, some of our mistake, we are not able to protect our loss. So that amount of loss that's are happening over and above the normal loss, sir, that is your abnormal loss, and we cannot be recovered from our customer. The customer will say, why I am paying the abnormal loss cost over here? The reason is that it is your mistake and you are recovering from the customer. That is the ingenuine. So that's why the reason we cannot be recovered and we cannot be incorporate under the cost sheet, or when we are preparing what, sir, when we are preparing the cost account or when we are preparing the process costing, we are not be required to incorporate the abnormal loss over here. So it is unnatural and unavoidable, and it emerges like your fire, like your revolt, like your flood, like your burglary, like your street mishap, and so on. There is just so many reasons you can say that the abnormal losses that maybe happen. But yes, we cannot be say that that abnormal loss we will recover from the customer. It's just like a you can say that it's just like a foolish thing, because we are not able to set our one per unit of cost when we are incorporating the abnormal loss, because this is a one-time loss. It may be happen or it may not be happen, because this is our mistake. So why we are recovering from the customer? So yes, when I am talking about the abnormal loss, so what the treatment we will do? We are not be incorporating first of all at the time when we are manufacturing our one particular units, or when we are preparing the process costing, or when we are preparing the cost account, we are not be incorporating what's the abnormal cost. So what is the treatment? We have to be transfer this particular abnormal loss to our costing P&L. Transfer to what? Transfer to the costing P&L over here. So this is our loss. Yes, so that's why the reason we are transferring into the costing P&L account. We are not be transferring into the process costing, and we are not be recovering that loss from the customer. Because when we are recovering, because at next time the chances that abnormal loss will not be happen, so we are not be able to go into the one particular unit, one particular cost per unit. So that's why the reason we are not be giving the treatment of abnormal cost in our process costing or in our cost account over here. But yes, we have to be transfer in a costing P&L of this whatever the abnormal loss we have. Now you can take the example. I have introduced 1000 kg of material. For that I have incurred the 2 lakh rupees of cost. In the same way, I have the 1 lakh rupees of labor, and I have the 50,000 of overhead over here. Now you can see the actual output of 850 kg, and out of which we have the normal loss of 10%. So first of all, I can see here when I have introduced the input of what? Input of 1000 kg, and in return when I am calculating what amount of normal loss I have, so I have the normal loss of 10%. So you can simply be see here the 100 kg, in January we have the 900 kg of what? 900 kg of output. But in practically or normal circumstances, we are able to only be produce actual output, that's we have only the 850 kg. So the remaining portion or remaining units that we are not able to manufacture is your what? Abnormal loss units over here. That is your 50 kg and your 850 kg your actual output over here. So now the question arises, sir, how we will give the treatment? First of all, let me know. So similarly, you have to be prepare account like the like we are preparing in the previous slides. So same we are preparing here the particulars. We are also be adding here what, sir? We are also be giving the units column, and after that we are giving the amounts column over here. So when I am writing here the amount of material cost that I have incurred the 2 lakh rupees, and for that purpose I am introducing the what, sir? 1000 kg of input. At the after time I have incurred also the labor cost, and the labor cost I have 1 lakh rupees. And for overhead I am saying what is the amount of overhead that I am incurring is your 50,000. Is your what? 50,000. Now you can see here we have again a normal loss. Normal loss of what? Normal loss of 10% at the rate 10%. Now we have the 100 kg of normal loss, and that is just sellable into the market. Yes, that is just sellable into the market, rupees 10. So I have 1000 of income also. So that's by the reason we are reducing or deducting from the actual cost. Now shall be I am also be write it down. Shall I am also be write it down here the abnormal loss unit? No sir, we are not be write it down. The reason is that we will not be recover that particular abnormal loss from the customer. So I have the total cost of again the 3,49,000 rupees, and for that I am producing what, sir? I am again producing, but not producing the actual output is still we have the 850 kg. But yes, I have what, sir? I have the 9 kg of over here the total units out of the 1000 kg out of the when I am deducting the 100 kg, I have what? 9 kg of what's the 9 kg of output over here. But here first of all I have to be calculate the cost per unit. What amount of cost that I will recover from the customer. So you can simply be calculate the cost per unit over here. Sir, how you will able to calculate? You can simply be divide the total amount of cost with the number of unit, actual unit that's from this actual units you are able to recover from the customer. So again you have what, sir? Again the same way you have out of the 3,49,000 divided by 900 kg, 387.77 kg of what, sir? Per kg unit you will recover from the customer. Now the question arises, how we will give the treatment? How we will give the treatment of abnormal cost? Abnormal cost. For abnormal cost, you can simply be value that abnormal cost. First of all, abnormal loss unit is what, sir? Yes, we out of the 1000 unit, we have 100 unit of what? 100 unit of, first of all, out of the total 1000 units, we have 100 units of normal loss. And we have what, sir? We have actually the production of what? We have actually the production of our 850 units. So the remaining portion that's we have the what, sir? 50 units is our abnormal loss over here. So please keep in your mind always costing as per AS2 accounting standard 2. We have to be value the cost. We have to be value the stock of cost or abnormal loss unit or normal loss unit only at the cost per unit. So that's why the reason when I am valuing the abnormal units cost, so this abnormal, now I am talking about how much abnormal loss that's I have to be incurred. So 50 units I have to be incurred, or for that purpose per unit cost that's I have 387.77 kg. So this amount of figure I have to be transfer in which column, sir? Transfer to P&L account, costing P&L account, because I cannot be recovered this amount of loss from the customer. So 50 multiplied by 387.77, yes, so 19388.5 I have to be transferred to the P&L account. I hope right now you are able to understand. I am again recovering what, sir? I am again recovering only the 387.77 per kg from what? From the customer. Let's say suppose if you have incorporated the abnormal cost here, now your per unit cost will be going up. Now you can see, now divided 3,49,000 divided by 850 units. Now you have the 410 rupees per kg units. Now you are recovering instead of 387 from the customer. Right now you are receiving, after incorporating the abnormal loss unit, 410 from the customer. That is not a fair. That is an injustice. Because it's a your mistake, it's a some unusual circumstances that's you can be protect, but you are not able to protect. So that's why the reason all the abnormal loss we have to be transferred into what? Costing panel. We cannot be added here down, or we will not be increase our cost per unit. We will only be charged that amount. We are not charging 410 rupees. I hope right now you are able to understand. Yes, sir. The next portion, the next we have the same example, abnormal gain. We have the same treatment like the abnormal loss that we have done. The same treatment we have for the abnormal gain also. Yes, now the abnormal gain is what, sir? When I am talking about the abnormal gain is your, when you are producing over and above the units, then we are actually expecting. Yes, we know very well, when I am manufacturing a particular units, I have a compulsory because it's a part of the production. At the time when I am manufacturing this unit, I have a compulsory of 10% of normal loss. Yes, sir, I know very well. This is a 10% of normal loss. So let's say assume I am manufacturing the 1000 kg of this unit. For that purpose, I have a normal cost of what? Normal loss of 10%, that is your 100 kg. But when I am seeing the actual production, I am surprised because the actual production is your 950 units. Now when I am talking about the actual production, I know very well the actual production will be your 900 kg only. But I am seeing here my actual production is 950 kg. Now your over and above the what, sir, unit that you have produced is your abnormal gain. Now again when we are incorporating the abnormal gain in our costing, so yes, it ultimately leads to decrease our cost at one instant, and after that when we have no any kind of abnormal gain units, then our cost will be going down. Cost will be going up. So that's why the reason again we are not be taking the treatment of abnormal gains, and for that purpose we have to be give the treatment under what? We have to be give the treatment under the costing P&L account. So what do you mean by abnormal gain? When I am talking about the abnormal gain, a situation where actual loss is less than the normal loss is your abnormal gain. So real production of units, when we have a more than the expected units after deducting the ordinary or normal loss, so that is your abnormal gain. So it is avoided from the total cost because it does not influence the expenses or cost per unit item. Yes, we have to be avoided that abnormal gain, because when we are incorporating same like when we will do the abnormal cost incorporation, or again we are doing the incorporation of abnormal gain in our costing time, so our cost per unit will going into the decrease. So that's why the reason we are transferring that abnormal cost into our what? Costing P&L. So yes, we have an example. Now we have the material cost, same example like that. But right now I can see my actual production is 950. I know very well I have introduced the input of 1000 kg. I know very well I have introduced the input of 1000 kg, and for that, yes, I know I have the 10% of normal loss. I know very clearly I have a 10% of what? Normal loss. In generally I have the 900, only the 900 of what, sir? 900 kg of actual production. But when I am seeing I have the 950 of the actual production, now the extra units that I have produced is not your normal units, is your abnormal units, and that is your abnormal gain units. Okay, so this is your abnormal, and yes, the again same treatment that we have done for the abnormal loss units, again we will do the same treatment for abnormal gain units also. Like in the same way, we are going to be prepare our account particulars. Now again we are preparing units, and we are again preparing the amount column, and yes, for that so doing I have incurring the material cost. After that I have incurred the labor cost, and yes, after that I have incurred the overhead cost over here. Now how much amount that's I have incurred? The 1000 kg I have introduced, and for that purpose I have incurring the 2 lakh amounts of direct material cost. For labor I have incurred the 1 lakh rupees of cost, and for overhead I have introduced the 50,000 of cost. Now I know very well I have a normal loss of what? Normal loss at the rate of 10% over here. Now you can simply calculate the 100 kg of what? 100 kg of normal loss unit. Now for that purpose, that unit are also be sellable for 1000 as a way of income that I have received. So at the last I have calculating what, sir? 3,49,000 is my actual cost for producing the 900 kg over here. But I am surprised that my actual output is 950 kg. But shall I am considering abnormal loss unit here? No sir. Abnormal gain unit here? No sir, because when I am considering the abnormal unit, again my cost will be down. But that is not a fair. So that's why the reason we will transfer into the costing panel again. So again I have to be calculate what? Again I have to be calculate the cost per unit over here. So I can simply be 3,49,000 divided by 900 kg. I have the 387.77 per kg. I have the cost per unit. And for the treatment of abnormal gain, I have to do what, sir? For abnormal gain, I have to be transfer this 387.77 per kg multiply by what? I have to be multiply by per unit of what, sir? 50 units. That 50 units when I am calculating, I have to be transfer this into what, sir? Transfer to P&L accounts over here. So this is your abnormal gain treatment. I hope right now you are able to understand. So 387.77 multiplied by 50, 193, 1900, 388. So 1900, 388.5 is your, that's loss, that's gain. We have to be transferred into the costing P&L over here, because when we are incorporating here, our cost per unit will going into the down. That's not fair. So that's why the reason we are giving the separate treatment of this abnormal gain. Okay, now you have a clear understanding about. Now I am hoping you have a clear understanding about what do you mean by, sir, normal loss, what do you mean by abnormal loss, and what do you mean by your abnormal gain over here. Now I am doing a one single question. In this particular question you will able to understand how we will prepare the process costing, how we will prepare the process accounts over here. The multiple process account, when we are introducing one raw material, that raw material will be used in the separate various processes, and after that we have what? Final product. So how we will incorporate or draw the process accounts, and how we will incorporate the normal loss, abnormal loss or abnormal gain at the time when we are preparing process accounts over here. Let's start. So here we have a question. You can read it out. A question: a product that is required to be completed in a 3 consecutive process, like your process 1, process 2 and process 3. So during a particular month, the input to the process 1 that's we have introduced as a way of raw material was your 5,000 units, and we have the raw material cost is about rupees 2 per unit over here. So other information that we have for output at the process 1, like we are introducing the 5,000 units, and at the end we are able to get the output of 4,700. Like in the second process we have 4,300, and at the last stage we have the 4,050 units. Next, at every stage we have a normal loss of 5%, again at the 10% or 5%, and that normal loss unit we are able to sold in the market rupees 1, 5 rupees or 6 rupees. And again we have the direct wages or direct expenses like that. And we have also be a treatment of overheads. Now this overhead is your indirect expenses, indirect material, indirect labor. Now the question arises, how we will apportion this overhead in your syllabus. Overhead is not in your part of the syllabus, but the concept of overhead and their apportionment always be mentioned in your question whenever you will do any single question over here. So I am see here we have the overhead of 32,000 that's chargeable to the percentage of direct wages. Yes, so there are no opening or closing work in process. So you are required to be prepare first of all the 3 process account and also the finished stock account with the detail of abnormal loss. You have to be give the detail, and you are also give the detail of abnormal gain. Right now we know very well what is the requirement of the question. Yes, how we will do? Let's start our question. Now first of all we have to be prepare the process 1 account. Yes, the question requirement is what, sir? The question requirement is, sir, please prepare the process 1 account. So at the first process, I am knowing very well, sir, I am introducing some amount of raw material or a direct material over here. And yes, that's are in the form of units, and yes, we have some amount over here for the purpose of what? For the purpose of all the expenses that we will incorporate. So first of all, I am introducing the direct material. I am introducing what? I am introducing the direct material. So here by this format you can also be prepare your process account, but for that purpose when you are preparing by using this method, you have to be prepare the 2 time of the same format. This will your debit side portion when we are introducing the material, and also you have to be do the effort of second time also when you are incorporating all the outputs. So I will suggest you to prepare only 1 time, only 1 account. So for that purpose I am simplifying your process cost. So that's why the reason I am simplifying your process cost. So now how you will the simplifying, sir, process cost? So here I will incorporate all the debit side column also or all the credit side column also into one process account. So here I have the detail of particulars. Here I can write the units column. Here after that I will write it down the amounts column. Again I am also incorporating here my credit side column also. So I have the particulars column. Again I have the units column, and same I have the amounts column over here. So here you can see, first of all I am introducing or my expenses related with your what? The basics account. You know very well all the expenses that we are our debit side, debit all the expenses and credit all the gains that we are having. Yes sir. So that our direct expenses that we will show in our what side? Sir, debit side. So here we have the direct material cost. What amount of direct material cost we have? So here you can see I have basically introduced the what, sir? Introduced the 5,000 units as a way of raw material, and for that purpose I am incurring at the rupees of 2 per kg as a way of direct material cost. So yes, I am incurring the 10,000 units, 10,000 unit over cost over here. Yes sir, I am incurring the 10,000 units of cost over here. Next we have what, sir? Next we have the direct wages. Yes sir, I have the direct wages. Now tell me, sir, what amount of direct wages that you have? You can simply be write it down 3,000 in the process account 1, that's I have the direct wages. So 3,000 of cost, that's I have the direct wages. Next I have the another expenses. Now your direct expenses is 9750. Your direct expenses is your what? 9750. And again I have some overhead, and in relation to the overhead I have one specific point related to the apportionment. Now this 32,000 of overhead is related with the all the process of what? All the processes of account. Now how we will apportion this overhead? Now the question is saying this overhead is related with the percentage of direct wages. Now what is the percentage of direct wages? Like your 3%, 5% or 8% over here. So how I will apportion the overhead? Like your the total amount of overhead, first of all we have the 32,000, and out of the 32,000 I am dividing here, multiplying first of all by 3 plus your 5 plus 3, 8 or 8, 16. So I am doing what? Multiply by 3 dividing by 16. So I am apportion into the process 1 account. So how I can apportion it? By 32,000 multiply by 3 divided by 16 over here. So I get the what, sir? I get simply the 6,000 of overhead over here. Yes sir, I get the 6,000. Now I have incorporate all the expenses. Yes sir, we have incorporate all the expenses. Next, what the things that we have to be incorporate? Now sir, we have to be incorporate our normal loss in our process 1 account. Sir, how I will incorporate the process 1 account normal loss? So here you can write it down your normal loss, because this is a part of the production, so that's why the reason we are incorporating over here. So normal loss unit is what? When the question is saying that you have a normal loss of 5% which are sellable at the rupees 1 per unit. So out of the 40 we have introduced the 5,000 units, and out of we have what, sir? We have the 5% as a way of normal loss. So 5,000 multiplied by 5%, I have 250 of what? I have 250 of here the units that we have normal loss. Now this normal loss unit is sold in the market. Yes, what is the sellable price over here? Now this normal units having a scrap value of rupees 1 over here. Now this amount of realizable that I have from the market is 250 is my income over here. So yes, this is your why I am doing this particular things in a bracket portion. No, I will not be give the bracket portion, because in this particular portion I have the ultimately deduct all the expenses from this income. Yes. Next you can see I have incorporated the normal unit also, I have incorporated the scrap value also, and I have also the direct wages, direct expenses, I have incurred all the things. Now what the thing that I have to be incorporate the output over here. Now this output is your process 2 account, because this output of 4,700 units is become the input of what? Is become the input of process second account. So this is your output. This is your what? Output over here. Now the question arises, how we will value this particular output of process 1. Sir, this particular process 1 output, we know very well as per accounting standard 2, we have to be value at the cost per unit or net realizable value, whichever is lower. We have a net realizable value in the question? No, sir. So that's why the reason we have to be value this 4,700 units at the cost per unit. So let's calculate how we will calculate the cost per unit over here. So calculating the cost per unit, what the things that I have to be incorporate? First of all, 10,000 rupees, 3,000 rupees I have to be added over here. 10,000 rupees, 3,000 rupees plus 9,750 plus your what? Plus your 6,000 minus what the things that I have to be deduct? So 250 you have to be deduct over here, and what the things that you have to be reduce over here. Now you can see here 5,000 is my input and 4,700 is my output. In relation to I have 300 of units loss. Now you can see here I have in actual what? 300 of units sold, but we know very well only 5% I have the normal loss. So the remaining portion that we have lost the unit is your abnormal loss. And we know very well, first of all, this abnormal units we have to be value on what, sir? Yes, we know very well we have to be value at the cost per unit, and yes, we have to be transfer this abnormal loss into the costing P&L over here. Yes, so this abnormal loss we have to be transfer into what? Costing P&L. Now the question arises, sir, what amount of abnormal loss unit that we have, sir? 50. The 50 we have the abnormal loss unit. Now we know very well, again I have to be value this abnormal units into the cost per unit, but at the time of calculating cost per unit, shall we consider the abnormal unit also or their amount? No, sir, because it ultimately leads to increase our cost per unit. So that's why the reason we will not be consider our cost per unit calculation at the time of calculation, we are not be considering abnormal loss calculation. So yes, after that I have 5,000 unit, and out of the 5,000 unit we have the 5% of normal loss unit. So why this? I can simply be calculate the cost per unit by 10,000 plus 3,000 plus 9,750 plus your 6,000 minus your 250 is your income, and divided by your what? Divided by your 4,750 of units. So I can simply be calculate 6 rupees per unit. 6 rupees per unit is your cost per unit. Now how I can calculate now the our process second output? So we have to be calculate the process second output at the cost per unit. what happened? Okay, the smart board is closed instantly. It's not my mistake, but you can see here. So yes, we have calculated the cost per unit. Yes sir, we have calculated the 6 rupees per unit. We have the cost over here. So I can simply be calculate 4,700 multiplied by 6. I have the valuation of what? I have the valuation of 28,200 as a way of what? As a way of process second account, valuation of process second unit of 4,700 units cost. Why it is not working? Okay, so yes, I can write it down here, the 28,200, and for the purpose of calculation 50 abnormal loss unit multiply by 6. So I have the 300 rupees of what? Abnormal loss account. Now you can simply be close the account by 10,000, by 3,000, by 9750, by 6,000, by minus 250, now 28,200, and now 300. You can see here my account is matched. Now when you are able to match your account, yes, when you are able to match your account process one account or every process account, when you are calculate all the calculation perfectly, you are able to match all the process account. So yes, we have the 5,000 units here, and again I have the 5,000 units here. 5,000 unit is here, and my account is simply be matched over here by 10,000 plus 10,000 plus 3,000 plus 9750 plus 6,000. So you can see here 28,750 is my, I am closing my accounts over here. So this is your process one account. Let's now you can simply be prepare again your process second account also, and by the same way you can prepare your process third account also. That's your all about the process account. Yes, I am hoping right now you are able to prepare. I can also be help you for preparing process 2 account again. Now I am preparing again what sir? Process 2 account, like the same format. I am using the same format, like here I am writing down here the particulars, I am again writing down here the units column, and again writing down here the amounts column, and after that I am again writing the particulars column over here. And yes, simply I have the unit column, and again I have the amount column over here. So by doing so, I am prepared the all the process account. So in the same way I can write all the expenses, your direct material, your direct labor. I have write the direct labor. Now I have also be write your direct expenses, and I can also be write here to overhead. Now I know very well how to be apportioned to the overhead by the 32,000. I have to be apportioned in relation to the percentage of what's the percentage of your wages over here. So initially in this particular case, I am not introducing any kind of direct material, but instead all the output of process 1, this will become the input of what? Process 2 account. So here I will write the process what sir? Process 1 account over here. Now I have the 4,700 units, and the amount of 4,700 unit is what sir? 28,200. Now I have the 28,200 over here. When I am talking about the direct labor, what amount of direct labor that we have incurred in process 2? So we have the direct wages 5,9910. So 5,9910. 5,9910 I have, and when I am 9910 I have. Okay. So when I am talking about the overhead, I know very well I have the 32,000 of overhead, multiply by 5 divided by 16, I get the apportionment overhead. So multiply by 5 divided by 16, I get the what? I get simply the overhead amount. So by 32,000 multiplied by 5 divided by 16, I can get the 10,000 amounts of overheads over here. By simply calculation, I am writing here again the normal loss. Now you know very well what amount of normal loss that you have in the process second account. Process second account, I have the 10% of what? 10% of normal loss units. So simply I can calculate 4700 units of multiply by 10%. I have the 470 units of normal loss. Now this normal loss unit we can sold in the market rupees 5 per unit over here. So by multiplying the 470 by the 5 rupees, I can get the 2305 rupees 50 rupees as a way of scrap value. Now I have some amounts of final product, and that final product will transfer into your process third account. And yes, we have to be value this particular process third account unit as per the cost per unit over here. Now you can simply see the process second output is our what? You can see the process second output is 4300. Now 4300 we have. So we have the 4300 over here. We have introduced 4700 input, and I am getting the 4300 as a way of output. Now you can see here we have only the 400 as a way of normal loss. So here I can see I can simply producing over and above the actual produce. Yes sir, because in fact we have only the in fact we have only the 4230 units, but we are able to produce 4300 units. It means what sir? It means 70 units is your abnormal gain. So yes, you can write it down here, your abnormal gains. So abnormal gain is your 70 units, but is you are incorporating your abnormal gain into the process account? No sir, we have to be transfer this abnormal gain into your costing P&L account. Costing P&L account. So for that purpose I have to be calculate what sir? Again I have to be calculate the cost per unit, and for the calculation of cost per unit I can simply add the 28,200, 5,000, 28,200, 5,000. After that I have add what the thing sir? After that I have to be add 9910 and 10,000. 9910 plus 10,000, and what amount that I will reduce, that what the scrap value that I have received, and out of the total units what amount of units that I am producing, 4700 minus your 470 units. 4700 minus your 470 units. So by doing so I will able to calculate the cost per unit. So 28,200, 5,000 plus 9910 plus 10,000 minus your what? Minus your 2350. You can simply be get the total cost. The total cost is about 50,760, and you have to be reduce the 4,700 units minus the 470 your normal loss. So you will get the 4230 your actual units that you have produced. So while doing calculation, so we are able to calculate the cost per unit. Now you can see here we have the cost per unit of 12 per kg. Now I have to be value what sir? I have to be value this 4,300 units as per the cost per unit. So simply I can calculate the 12 rupees per unit. So I have the 51,700 valuation of process 2 account output, and for calculating the normal loss I have what sir? I have the 12 multiplied by 70, 840 is our abnormal gain. Now you can simply be found your accounts will be matched over here. 28,200 plus 5,000, 9910, 10,000, 10,000 plus 840 minus 2350 minus your 5160. So yes, you are able to get your account closed. So this is your what? You can see here I am able to calculate my what? I am able to calculate my all the accounts of what sir? All the accounts of my abnormal loss and the process second account. So by doing so, this amount you have to be transferred into costing P&L, and this process second account's output will become the output of what? Output of your process input of your process third account. So this is all about your what? This is all about your process account. I hope you are literally enjoy the session. The remaining account, your process 3 accounts, I am giving you a homework. So please draw it by your own. The remaining account, abnormal loss account, that's I will prepare in my paid class. So yes, I will encourage you to please download the application and enroll in the SEBI Grade A course. And by doing so, you can cover the entire syllabus of costing from my side, and also you will cover the company law syllabus from my side. So I will cover your each and every concepts in a very amazing way or very interesting way. So I am requesting you, all of you, if you want to score a very good marks in your costing and company law, so you can do your syllabus with myself. I will explain your each and every concept by giving so many examples. So yes, that's all about this session. If you are really like this session, please click on the like button if you are watching on the WhatsApp, if you are watching on the YouTube. But if you are watching this class on the application, you can simply be click on the thumbs up button and give your the valuable rating. That's all about this session, and thank you very much. And I am saying only one thing. That's I have the experience of more than 6 years, where I have mentored more than 3 lakh aspirants, and most of the aspirants you can see here, chartered accountant aspirants, company secretary aspirants. So I am the right person, will guide you how you will get a very good marks in your costing syllabus, in your account syllabus, in your company law syllabus. But for your SEBI grade examination, I am covering only your costing portion and your company law portion. So be assured, select your right mentor, and yes, I am assuring you, you will able to crack your SEBI grade examination with your flying marks. So don't be wait, download the application and yes, enroll the SEBI grade examination. Till then, take care. Thank you very much. If you like this session, don't forget to click on the like button, and please tell me how you enjoy my teaching style. So please don't forget to give your comments, valuable comments in the comment box. Thank you very much.
The journey to crack one of India's toughest exams, the RBI Grade B, is long, one that needs perseverance and the right strategy. Hi, this is Anil. I was fortunate to be the All India Rank 1 holder in RBI exam back in 2018. If you are aiming to crack this exam in 2024, I might be able to help you achieve this dream. As a super mentor for the RBI program on Oliveboard, I'm available to interact one-on-one with you, share strategy lessons and draw insights from my own preparation and set you up for success. Click the link below to check out the details. See you on Oliveboard soon.